Cool. What's up, everyone? We're live. Welcome back to this video. I just got back from the airport. I'm a little bit tired, to be honest, but I'm sitting out today here with Alejandro. So what's up, Alejandro? How's it going today?
Hi, Etienne. Good. And you?
For sure. Well, good. Still good. Still good. I was willing to tell to you guys. And so today what we thought we would do is kind of like a Q&A. We'll answer your question. I see we have that's awesome. John already there, which is pretty cool. But yeah, we'll answer your question, go through whatever you want us to answer. We have some topic prepared that we kind of want to go through, things that people ask all the time and stuff that you might be interested in hearing. So something are going to be a little bit like controversial and stuff, but we want to give you guys value and kind of put you in the right path. That's why we do this. So we'll get started. So Alejandro, we want to kind of go through some questions that we had prepared.
Yeah. Well, I just want to say, people, thank you for joining. And second part, the best sessions like this, like this type of Q&As, are the ones in which you participate. So send us your questions, and then we can then answer you better the things that are more relevant to you at the moment. But we have a couple of questions here prepared to kick things off. So I'm looking through some of the questions to see which ones are one of the best questions we have here to start. We have one question here that we have had repeated times. It is, should you try to get the perfect setup every time, or should you wait for the perfect trade to happen and only take the perfect trades, or take like any trade that kind of fits your setup and things like that? So that would be, I think, a great kickoff question.
Yeah, I think it's like two versions to this. So like version one is like, first of all, when you think about like what is perfect, is it like, because you cannot know what perfect means. Is it like profitable trade? That's going to be perfect, of course, but you cannot know like what makes a perfect trade, meaning a trade that makes money. So you got to kind of have filters, I think, but not be too limited to your filters. Otherwise, you're not going to take much trades, and you never know in advance whether they're going to be profitable or not in the future. So that's one thing. Now, there's this kind of concept of, I think, like, do you want to trade everything and get lower stats, so stats are going to be a little bit bad, or do you want to kind of be really, really specific, really like focused, and take only the best trades? That could be an option too, and that's kind of something that here's the thing, like that's something you don't want to do at first, because if you try to kind of learn to trade and then go to trade the perfect trade all the time, you won't find them because you don't have the experience to kind of tell what's perfect, what's not. So I think over time, that's when you define like, here's my trade, here's what this is, like high probability, low probability and stuff. And that's how you figure out which one you should take. And then you filter out. And the trades you take over time, like after like a year, 2 years, 3 years, they are getting closer to perfect, but they cannot be perfect at first. Does that make sense?
Yeah, exactly. And I also want to say, like, if you're trading a discretionary trading system, there is never a perfect trade, because even if like the market will never do exactly the same thing with exactly the same size candle, with exactly the same pips and everything 2 times. So even if you have like your textbook definition of things, what you should do, you can say that a perfect trade could be that everything lines up in what should be happening in order to take your trade. But you can never have a perfect trade, because there are always little nuances in the market, and the market is always slightly different in there. So that is the answer that Etienne gave. I think it is great for that.
Awesome. I think I want to answer the question we have on the chat right now from John, which is, would you say the system doesn't matter? It's how you manage the trade and the trade when you're in the trade. And I think there's two things. Like, what if you enter in like you have the wrong entry all the time? What if you enter like at the top and it's always reversing after, and you want to kind of press to move further? Well, like your entry is wrong, and that doesn't work. What if you enter at the wrong place and try to manage it like really well? Well, like, you're still wrong. Doesn't matter. What if you try to enter and you pick like a good spot to enter, but you manage like shit? Like you wait for like a 20R to be able to exit the trade. Well, like you're wrong. What if you enter a trade, you have a good entry, and then you manage this properly? Like you have a stop loss. You maybe like move your stop loss. You maybe scale out, whatever. But you manage to kind of get profit out of the market based on what happens. Well, that's good. So you've combined both. So I think you need both. And the cool thing is, if your system doesn't work, you got to figure out, is it my system, like my entry, or is it my management of the position when I'm in, basically. And you can figure it out easily. You can look at my Facebook. They have like I think they have like an accuracy. I think it's called accuracy, like percentage of like how price moves in your direction when you enter. And if you get like 0, like a really low percentage, then it means like you enter in price reverse in the opposite direction, and you miss all your trades. If you get like 100%, it means like you enter a trade, price goes to your target, and then that's it. You exit the trade automatically, and there's no like downside, there's no loss, or anything. So that's kind of how you can figure it out. And then if that's good, if you get to a good accuracy, you can kind of look at how you manage the trade, how to get the most out of the move. And maybe sometimes like we tend to exit too quick, or some people too fast or too late. And that's where you can kind of tweak things and adapt and try to have different ways. Like there's many ways you can kind of manage your position with the stop loss, take profit, whatever you decide, and different ways you can do it. So we can go on that if you guys want, but I think that's my answer. You have anything to add, Alejandro, on that?
Yeah, I would like to say something is that like risk management and money management itself can help you to improve a system. For example, if you have a mediocre system and you apply good risk management, it will not make it into a good system. It will just make you lose money slowly instead of lose money fast. So instead of you breaking your account or losing your account in a few trades or in a few days, you will lose money, but it will take a lot longer time, which could help because it could give you time to evaluate and improve your system, right? Contrary to just losing your account in 3 trades or in a couple of weeks, and then you have no more money to continue trading. But yeah, you have to have both. You cannot, like many people say that trading, like it can go up or down, it's 50-50% if it goes or goes down, the price. And yes, that's true. But the other part is once you start placing a target, a profit target and a stop loss, then that means that your probability is not 50-50%. Now the probability is how probable is that the price goes first to my target than to my stop loss. So you start changing the probabilities and changing the things. So for me, it's always a mix of you have to have a system that works. You have to have the money management that will make that system in the drawdowns be less drawdowns and in the profit parts get you more profits. And you have to have psychology so you can, or the mindset, so you can execute that system and you can apply those risk metrics properly. So for me, it is never one single thing that works, and it is not like any other things don't matter. All of them matter, and all of them have to be together in order to be able to have a profitable, wholesome system.
Yeah, this is like such a good topic. This is like really, really cool. So whatever strategy you have right now, like whatever thing you trade now, if you want to get profitable, you do one simple thing. You rank yourself on these different parts. You rank yourself on the setup, on the entry, on the exit, and on your money, your risk and money management. So what if like you, for example, like your setup, like for me, Bong Band reversal, that's my setup. Bong Band break, engulfing candle, whatever. Yeah, that's a setup. Does it kind of pretty smooth? Yeah, maybe. Yeah, it does. So that's a good setup. But then how's my entry? Is my entry like too low? Do I enter it like too quick or too late or whatever? Do I miss like do I leave like profit on the table because I put my entry too high or whatever? That's your entry. Then you exit. How's your exit? Do you exit too late, too early, whatever? And then how's your risk management? Like what do you risk per trade? And if you can find out, like there's gonna be one that's gonna be lower for everyone. Even for me now, there's one that's gonna be lower. I need to kind of pick that one, work on it, and make it better. Find ways to make it better. You can do this by talking to traders, reaching out to people. You can find other strategies, and then you get ideas from different people, and that's how you improve. That's how you fix your system at any time. Does that make sense?
Yeah, exactly. I think that is a great answer for that. I would like to go through some of the other questions we have right now in the live chat.
Yeah, sure. Okay.
We have here one from I Cervantes, which is, do you guys personally trade discretionary discretionary systems, and how reliable is a divergence? So I personally don't know how reliable is a divergence. I have not statistically taken the time to analyze divergence statistically. But I personally trade discretionary systems, and even Etienne in the Bollinger Band reversal, there is a discretionary part to a pretty systematic system. But you can explain your part better.
Yeah. So I don't trade fully discretionary based on the fact that it wouldn't work with my personality, I believe. I would be like really bad at that. But I don't trade fully systematic because I believe that I can have a better edge with being a little bit discretionary, like just a little bit, with like the zones I look at, where I think the price can reverse. And I think the same thing with like the divergence. I'm pretty sure it won't work well if you take it out of context. If you take it in the right context, it's gonna work probably well. But if you take it outside of the context, meaning like you don't look at the context at all, and you just like trade whatever you see, all diverges on the RSI, whatever, then that will work. That's not gonna be good, and that's probably not gonna be good unless it's like really special. But I don't think so. And that's why I think it's good to apply a little bit of both. You can do 50-50. I do like probably like maybe 80% systematic, 20% discretionary, something of the sort. And that seems to work well for me. Okay. But I know for a fact that if I want to go like deeper and more systematic, I'll have to work hard to kind of code my things that or find rules that are systematic for my discretionary now.
Yeah, and I also that also goes back to what we said last week, right? That you have to trade what works better with your personality and your situation,
Sure.
and not just anything. I personally trade discretionary, and something that Etienne said that the context matters a lot. For my discretionary trading, I have different systems, let's call them that, to trade within that. And all of those are based on context. So if we have X context and we use these three systems. If we have Y context, we use this. And if we have these other context, then we use only this and this, right? So everything, especially in discretionary trading, will have to be context dependent. And the more discretionary you go, the more context dependent everything becomes and more nuanced, because you will have to learn and to develop more complex skills to understand those things. So it depends on the person. And it is, as always, like even if you go systematic or if you go discretionary, it is always a lot of work, and you have to do the work in order to get to a profitable stage.
Yeah, of course. Yeah. You want to answer the question from Kevin Khan. Do you trade and master only one currency pair or multiple currency pair? And we probably do the same. So
yeah, like in my back test and for my systematic and algorithmic trading, I first go one system, one pair, one time frame. I test that, I optimize that, and if it works, then I go to another one and start it into my portfolio. But for all my trading, I have always not been like, okay, I want one pair, but I have like a set of pairs, a couple of pairs. When I make my day trading, I have, well, I don't day trade much now, but before when I did trade more, it was 4 pairs, which were only the majors, which all of them have such similar characteristics in that. And for my swing trading and the other type of my algo trading and systematic trading, for all of them, I had a suite of pairs, but they were all had similar personalities. So they were similar person characteristics, but they were slightly different. And my idea is it depends a lot. If you are a day trader that is taking 10, 20 trades in a day, then by all means, better go with one single pair and become master of that, because it takes a lot of time and a lot of mental bandwidth to be able to take 10, 20 to 30 trades in one day on one single pair. If you had to watch 3 or 4 different instruments for that, then you will become crazy pretty fast. But if you are a swing trader, then having only one single pair may mean that you have one trade for one whole month. And that may not be enough, statistically speaking, and for your strategy to give you the profits. So that's my view personally in that part.
Yeah. So first of all, it's a kind of subjective thing. You decide what you prefer. And let's kind of put it this way. So the more setup you have, the more strategies you have, the less pairs you trade. The less strategies you have, the more pair you trade. Does that make sense? If you have only one setup like I have, and maybe I'll have to see more in the future, but then I'll trade like more pair. If I have like 5 setup, then I'm actually only one pair, because I kind of want to focus on that pair. And I'll get to know that pair better and become the specialist at that, which is fun too. So it depends what you prefer and how many setups you have at this point.
Exactly. I will go with another question from Alvaro Lopez. Do you feel starting out trading, live trading, better to go intraday or swing trade with a 1K account? For example, using a 1 to 2% risk per trade, but higher risk reward. What would you say in that part? I have a pretty developed answer that I have developed over the years, and it's pretty set now, my answer for that, but I want to know what is your answer for that part?
Yeah. So Alvaro, like putting in profit aside, you got to think about 3 things. And we'll go kind of with each of them a little bit. So you got to think about the feedback loop. Okay, that's the first one. You got to think about the personality you have, and the time you have available. If like one doesn't work, then don't do it. If like so like feedback loop. Well, if you did trade, you have more feedback. Like feedback comes faster, which means you can improve faster. You like get improve faster, get ideas faster, and stuff. That's really good. You get more stats faster, which is awesome. So day trading is better for that. Otherwise, you're gonna have to kind of wait a longer time. But then it comes to like personality. What's your personality telling you to do based on the profile test? You can do a test with that, can tell you the results and stuff. What are you gonna be the best at? Likely. And you want to pick the right style because that's gonna help you kind of boost your results fast and not waste time like trying something out that doesn't work, go back to something else. And so maybe your personality is more like calm, you want to do like swing trading. Okay. Or your personality is like more active, like more I don't know how to say, but like more sharp, more like you look at things quickly and stuff. Day trading better. And then look at time you have available. What if like you work from 9 to 5 and then you come back home and you're tired and stuff, you don't want to trade and you cannot trade before work? Well, better swing trade. Like you have like a little less like mental power that you need, just like you need more like less focus to be able to swing trade as opposed to like just trading for a few hours every day. And then if you have time to trade, to day trade, then that's fine, do it. But you gotta look at like all these three things and then make a wise decision on those three for sure. And it's not about the profits, it's about all these three things. What do you think?
I think that is a great answer. It is kind of similar to part of my answer because my answer actually comes first. Like day trading, personally, I think it's a lot harder than swing trading because the higher the time frame you go, the clearer the signals are. So it is easier to spot some things in the higher time frames than in lower time frames. There is less nuance to the movements. And also you have more time to think. So like if you're like trading a weekly chart, it only closes once a week. So you have, if you're taking only trades after the week close, you have a whole week to think and evaluate what happened in order to be able to like to place a trade, right? If we say it like that. So you have more time in that sense, and it is easier to start with those things. So that's the first thing. Like it may be like the feedback loop. You can have faster feedback loop with daily time, with intraday trading, because you can take several trades a day, but you also have more opportunities for messing up and more kind of incentive to go into that gambler's part that many people will have in the mind and go with the rush of the thing, because many traders like to day trade or intraday trade because of the rush of the movement and that. And usually the swing traders are the ones that have like, they don't care about the rush. They are just doing it in a more long-term way. Because if you're a day trader that needs that rush, the adrenaline rush of the markets, like you will not get that with swing trading because everything moves so slow that let's say that rush gets diluted over a couple of weeks or a couple of days instead of a couple of minutes or a couple of hours. So that is one part in terms of your personality and that could help. And then other part I say is if you have the time, then day trading could be good. But I always tell people if you are starting, then first go through demo. Well, simulation first or practice using software like Software FX. So you practice, doesn't matter the time frame, you can start with a higher time frame because it's easier. You can go by years of data and you practice your skills and your setups. And then after that, you go into demo and then you start drilling down into the time frame. And then based on your personality, you may be better suited for day trading. Then you go to that part and then you use all the other parts to acquire skills. And then you go into the live or demo day trading in order to acquire the last part, the psychological and the real-time execution of things, right? So that will be more like what I would suggest people to do, because I think that for some people, it may be better to just start directly into day trading. And for others, it may be better to actually never touch day trading at all. So it all depends on many factors. And it is, in the end, like many things in trading, a personal thing that you will have to discover with experimentation.
Yeah, I agree with that for sure. Awesome. Another question we have in the chat is, how do you deal with large bank manipulation? Like in the example of the Chinese yuan.
I would say, I wanted to say like some like pretty blunt, like you don't deal with it, it just happens. So like you can just prepare in terms of having a good risk plan and having a small position size, good risk management, so that even if that happens and it goes above your stop loss or something like that, then you still only lose a small amount of money. But then in the other part, like I will tell you what I told to my Bitcoin traders here in Mexico, my old crypto traders here in Mexico. They are always saying that the stocks are manipulated and the Fed and that manipulates the stock markets. And I'm like, I don't care if it's manipulated. I can make a system that makes money with that, if it's manipulated or not. I personally don't really care because my systems work with whatever it is right now that is happening. So I account for it, maybe, and I trade less of some of those pairs. But even with that manipulation, if I have an edge, then I don't care about manipulation. I just take into account my risk for my risk calculations and for my risk estimations. That is the only thing I prepare for it in a risk way. So prepare for the risk part. But if I can make profit from that, or if I can create a plan, a trading plan that works and uses that to my advantage, then I will take it. I have no issue with manipulation because in this world, every currency is at least slightly manipulated, if not by political news, by other things, or by the actual central banks. And many stocks, markets, and that are manipulated, and even all the cryptos are also manipulated. So the manipulation of the markets it's all in there. It just changed through the years. It gets more nuanced, it gets different. And sometimes it's just manipulated. It just happens. Things just happen. No one knows why it happens. So some people say it's manipulated. So it's just for me like part of the natural idiosyncrasies of the markets and of the instruments. And I just account it as, okay, this could happen, just manage your risk. And that's all I do.
Yeah, well, so I think the yen is like one extreme example of like pairs that are manipulated by the government or whatever happens. It's like the extreme example, like some pairs like your USD won't be that impacted by it. It's going to be different. So you've got your choice. Either you don't, like you just stay away, don't trade that, which you would be better doing for most pairs. Like if you're going to trade like the Chinese yuan or the like the Thai baht, whatever, like maybe don't trade that. Maybe that's the best idea ever. Maybe it's not really smart. Or like you think about, well, I want to understand what happens in the government, like what they do when they do it, and you kind of do that, which is like the hardest thing ever. Or you do what Real said, which is like manage it, get proper risk management, work on your setup, work on your skills, work on your risk, and still do it. If you see it makes sense. But for me, if it's like too like weird, I would just stay away.
Yeah, actually, like in the case of the yuan, I just have not placed a trade in any Asian currency.
Oh, yeah.
For the moment. I mean, I had technically an exposure to Asian currencies because of my plan going to Macau soon, but I have not placed any trade in there. And I also would say that for most people trading exotic currencies like the Mexican peso, most of Asian currencies that are not, like the yen, the Japanese yen, or the main Asian currencies, or the South African currencies, all of those, I would actually only let it that for more developed, more experienced traders. Or if you will live in the country, for example, I live in Mexico, so I do trade the Mexican peso because sometimes just like being exposed to the environment on that place, you may have some things that, okay, you may know that most likely, for example, in my case, Mexican peso, I know that the USD Mexican peso will most likely never go below 18.6 or something like that. So I can just put orders at that bottom of a channel and expect it to rise, which was what happened a couple of weeks ago, like that. It just touched and then bolted up. So for me, those type of manipulations, which they are part of manipulation by the markets, Trump and manipulation of the central bank, Mexico actually, technically doesn't manipulate, it controls currency. That's how it's called nicely when you are not called out by the governments, they are not angry at you. But many countries do it, like Switzerland had done it for several years. It stopped doing it because it was too expensive for doing. New Zealand dollar was one of the most controlled currencies in the past of the floating currencies. Many currencies have manipulation, so I don't really care as long as I can control my risk. But yeah, most currencies you should not be trading anyways, like that. So but I would say it's okay, focus on a group, on a niche, and then be good at that. And then maybe you can expand to other things. But whenever you expand to something new, you do it with less risk in any way. So for example, I would not be trading Chinese yuan maybe for the next 3 years, unless probably later after I live there, near there, I may start trading it. But that would be the same thing with Mexican peso, because I have some kind of like country knowledge about the thing. But if I was a European trader, I probably would never trade the Mexican peso because it's super dirty. Like if you go by the price action, it's super dirty compared to other pairs. But there are some things that happen a lot that you may not notice them unless you live in the country, because you have like been living here for many years, and you notice some things happening with the currency once in a while. So like unless you can notice those things or have like some insider information or something like that, it's really hard to check like those type of things with manipulations.
Yeah, definitely. I want to go to do consider correlation. Well, right now, no, because if we're talking about algos, it's really hard to kind of consider correlation stuff. So I don't do it now. I don't look at correlation much. And we have some data that are going to be correlated, but it's not the end of the world. I used to look at it before, so you can like search on YouTube correlation disaster trade. You'll find a video from me that in the past how to do it. It's pretty simple. To do that, and that's all explain that video if you want. So pretty simple.
Yeah, and I would say that correlation, the most important part, correlation is just for the risk management part. You don't want to have 20 trades open with all of them exposed to the euro, right, in the same side or something like that. So that will be like the main like hallmark of what you need correlation for. Any trading needs correlation for. But yeah, like if you tested your algos and you know that they work, even if they're correlated, then that's okay. You know what you're doing in that case.
Yeah. I know Austin loves the painting at the back, which is fine. What's up, Austin? Welcome. Cool. Is XM a trusted broker? I cannot tell. I've never used them. I don't know if you have any thoughts if you use them or not.
No, I have never used them. I have heard a bit about them sponsoring some events, but that is all. Like I don't know much about XM. I use my 3 brokers, and that is what I use, and I love them. They are pretty good, but that's all.
Cool. Awesome. One thing I don't understand, that's a comment. That's not me who doesn't understand. One thing I don't understand is if you're able to make 30-40% a year, then you need more than $100,000 in order to make real money. Is that true? I guess the question is like, if you want to be able to trade for a living, you need at least 100K. And yeah, the answer is true.
Yeah, that's pretty true, Marco. That is like, if you want to make 30 to 40,000 US dollars a year, you will need at least $100,000 in your account to be able to do that. If you can consistently do 30 to 40% in a year, but also I would consider that number. Like if you have a drawdown that year, a normal drawdown that year, you will not have any money to live off. So I would ideally say that you require a higher amount than that to support yourself. If that is your only income and you have nothing else, no other savings and nothing like that, you will require a bigger amount. And I will always say that you have to have some safe money first, then your trading account, and ideally other sources of income that you can tap onto temporarily.
And please don't say something like, "Oh, I cannot ever have 100K in my account." It's impossible. Don't say that, because if you have the skill and the experience and the expertise, it's easy to get that money. You can find investors everywhere. And I was speaking with Michael Tama like yesterday and stuff about the same topic. It's easy. Like, you get investors everywhere, especially in China, which is like the case for him. Easy to find investors. So, well, you have to go to China. It's fun. Like, stay at your home, it's in your country. It's totally fun. But just like be open and talk about what you do and stuff, and you'll find investors. That's how we all find investors.
Yeah, exactly. And if you have investors, you may need more money because you are not getting the full amount. Like, it's not like they are giving you the money and then it's your money. You're going to give them profits and then you're going to charge them from those profits. So you may need like 5 times that, make a trading for a living. But it is surprisingly easy to get investors' money. The hard part is to get started. And for that, there are many platforms like Equations with Axie Trader, the Axie Select program. And there are other platforms to do that. And then once you get that and you get a track record, it can be really easy to get investors. And there are some countries in which, yes, you may not get investors, but there are also prop firms and other places, international markets, let's call it that, like for investors that you can get. And then, like if you're in the US, it's surprisingly easy to get $10 million in the US because there are people that could invest $1 million in you without much trouble. Here in Mexico, it's hard to make people invest $1 million. You will make them invest like 50K, and that would be a big size of their money, the savings and that. But it depends by market and that. The more developed your market, the more likely there is people that have millions of dollars to invest, could invest in you. So it is like once you get to a certain level, it is not hard to get the money, but you have to have the skill first.
Yeah, totally agree with that. I think we'll wrap it up for now, guys. We appreciate your questions as always. Thank you for bringing them here to the live video with it right now. I appreciate that a lot. Make sure you comment below in the comment section if you have any more questions on that, and we can do future videos on kind of technologies for the future. And yeah, that would be awesome. Give it a like if you liked the video today. I would appreciate this a lot. And we'll catch you back here pretty soon.